Welcome back. You're watching Market Fatafat, a show where we tell you all the buzzers for today's trading session, either on the back of the news flow or on the back of the technicals that are showing momentum. And moving on with the stocks then, but before that, let me welcome on board Mr. Nooresh Merani, who is joining us onto the technical front. Very good afternoon, Nooresh, and let's talk to you about your first stock, that is from the auto OEM space, Maruti Suzuki. That particular counter has been buzzing. We also have the auto sales data that is lined up as well, but what are the technicals looking like and telling you?
So Maruti is an interesting long-term chart. So if we go back to the history, 2018 was the time where it missed 10,000 by a few points. Then in 2018, in the mid of 2018 also, it came closer to 9,800, 9,900, and then corrected down to sub 5,000 levels in COVID. Back in November, December 2022, it came closer to 9,800 mark. And just say 3-4 weeks back also, we were at 9,800. And today the stock has also tried to come towards 9,800,000 mark. So this 10,000 mark has been a problem for the stock. But if we look at the structure, it looks like a cup and handle formation, or you could call it an inverted head and shoulders, with a neckline at 9,800 to 10,000. And if it sustains above those levels, it opens up a move towards 12,000 rupees as a target price in the short to medium term case. So a buy at current levels, add on dips to 9,300 to 9,500 zones, and once it sustains 10,000, it would be a clean breakout. A stop loss to be placed at 9,200.
Okay, surely keeping an eye out on those levels for Maruti. But let's move on and talk about ICICI Bank and ICICI Security. Two stocks. Why are these two in focus, Lisa?
Well, yes, ICICI Securities, the board has approved the draft scheme of arrangement. This is for delisting of the company's shares, and following which it will become the wholly owned subsidiary of ICICI Bank. Currently, ICICI Bank holds around 75% stake in the company, and following the delisting, the shares of the shareholders of ICICI Securities, they will be allotted 67 shares of ICICI Bank against 100 shares held, and the proposed share exchange ratio that implies a premium to the market price of ICICI Securities. Well, ET Now is the first to report on 27 June that the delisting of ICICI Securities, that will happen via the share swap and not via cash. So the scheme is also subject to various approvals from ICICI Bank and various stakeholders. And ICICI Bank mentioned that they will not be infusing additional capital into ICICI Securities, and that is because ICICI Securities have enough internal accruals for its growth plans. And even analysts are of view that both the entities will be capitalizing the synergies from this deal. So, well, yes, ICICI Securities and ICICI Bank is in focus on the back of this deal.
Okay, moving on and telling you the stock number 17 that is in focus, and from the capital goods space, ABB India is the counter is in focus on the back of the new order win, wherein the company has been awarded electrification and automation contract for ArcelorMittal's Nippon Steel India's new advanced cold rolling mill. Definitely a positive for this particular company, as the order has been placed through the original equipment manufacturer JCIL for the new advanced steel processing lines at the client's flagship Hazira plant in Gujarat, and ABB technology will support the increased energy efficiency and optimizing their zinc consumption, leading to greater sustainability in the steel production process. Although the stock is flat in trade today, but on the back of this news flow, definitely in focus.
Keeping an eye out on ABB. But let's move on and talk about a bank, and that is Bandhan Bank on the charts, Nooresh. This one has remained quite range bound when you look at it in the last 1 year as well, from around those 200 levels to 300, and it's just been around those levels and not managed to cross that. What is the view on the charts today? The stock is trading with gains of almost 4.5% as of now.
So before we look at Bandhan Bank, we look at what has been happening in the whole sector. Everything in banking, microfinance, NBFCs has started taking leadership. And we've seen a L&T Finance holding a new all-time high. You've seen IndusInd Bank making a 52-week high, or even RBL Bank doing well. Ujjivan has been in a one-way trend, and Bandhan has been a relative underperformer. Now, if you look at the longer term also, yes, it's been an underperformer at 230, 240. This is the price where it was available in June of 2020. And pre-COVID also, the stock used to be closer to 400 levels. So the stock has corrected a lot. In the near term, it had started outperforming. It made a low at 190 odd levels, went up to 270 from April till May, June. And over the last 1 month, the stock saw a correction wherein there seemed to be a lot of selling pressure on the stock. The stock corrected from 270 back to 230 to 235 levels. There was huge volumes on Wednesday, as well as today there was a 40 lakh shares block at around 234 odd levels, and we've started seeing a reversal. And today is one of the higher volume days, almost closing to 1.8 crore shares traded, which is higher than the last 1 month average daily volumes. Indicates a possible bottom is in place, and we start a trend, and the stocks starts catching up with the rest of the banking space. So a buy at current level, stop loss at 233 and a target price of 270 and then 300.
Okay, moving on, and Ashesha, after a lot of momentum and news flow on HDFC Life, this particular counter is trading flat today, but why is that in focus yet?
Well, yes, HDFC group of stocks have been in focus for the last many trading sessions for several reasons. HDFC Life in particular because of two block deals that took place on 2 consecutive days. On Wednesday, HDFC Group bought about 1.66 crore shares in HDFC Life at the price of 674 rupees per share. Remember, RBI had permitted HDFC Group to increase its shareholding in HDFC Life to over 50% before the effective date of merger. Now that the timeline is out, it has gone ahead and increased its stake. As on the 31st of March, HDFC held about 48.65% stake in the company. And with the 2 block deals that have happened on 2 consecutive days, now the shareholding has crossed that 50% mark. So on account of this news, the stock has been buzzing for the last 2 trading sessions.
Okay, surely keeping an eye out on that one. But let's move on and talk about Canara Bank. And why is this one in focus? Because what the company announced is that they are to raise capital through Basel III compliant additional tier 1 bonds. And that's going to be to an extent of around 3,500 crores. This is in FY23 as well as FY24. 23-24 is what they're looking at. Additionally, they are also to raise capital through Basel III compliant tier 2 bonds to an extent of around 4,000 crores during FY23, FY24. So on the back of this, let's keep an eye out on Canara Bank. It's in focus, up and buzzing in trade with gains of almost 1.6% in trade shifting.
Okay, let's shift focus once again to the auto space, and now from the two-wheeler space, Nooresh, Hero MotoCorp is in focus. Tell us, what sort of a target are you looking out at this one?
Hero MotoCorp looks like a structural change in the stock after a really long period of underperformance. The stock used to be at 2,800 odd levels back in 2015, and even if we look at a dividend adjusted basis, last 5-6 year return is 0. So the stock has gone nowhere for a long period of time. Then we go back to the last 2 to 3 years, or rather 4 years. Every time the stock has come to 2,800 to 3,000 levels, or 2,950, 3,000, the stock has corrected back. The last 2 times, last year it went to 2,250, this time 2,300. And now over the last 3 months, the stock has started showing outperformance with the indices as well as the Nifty Auto Index. Now once it crosses 3,000 levels, it would be a major breakout, a long-term trend change. Very similar to what has happened with a lot of other auto stocks one by one. We saw this happen in Mahindra & Mahindra in 2021, new launches coming in, the stock did nothing before that and then went up from 800,000 to 1,400 rupees today. So Hero MotoCorp eventually could make that sort of a move. So at current levels of 2,800, 2,900, the risk reward is in favor. The stock could go towards 3,600 to 4,000 over the medium to long term. A stop loss to be kept at 27.
Okay, let's move on to the next one, and that is Credit Access. Lisa, why is this one in focus? Anything in block deals front, or what is the news flow today?
Yes, you're right. It's again on the back of block deals. So Credit Access, the company promoter will be selling around, it's likely that they will be selling around 5.8% in this microfinance institution, and the block deal is worth around 1,100 crore. The shares have been sold in the range of 1,230 to 1,255, and it entails a 7.2% discount to Wednesday close price. Well, the Credit Access promoter is Credit Access India BV, and they were holding around 73.68% stake, and with this, the stake will reduce to around 67.88%. Well, in the last 10 sessions, Credit Access has shot up at around 12%, and we have seen now with this block deal, the stock is down around 4.8% as we speak.
Okay, moving on to the next stock then, and on the back of a new order win, Kalpataru is in focus. Kalpataru Power has bagged around 1,008 crores worth of new orders, and the details of the new order says that there has been an order win in their T&D business for 635 crores. In India as well as in the overseas market. Onto the civil works side for buildings, especially in India, they have bagged a new order win of 373 crores. And on the consolidated basis, if we see, then the company also informed that their inflows onto the front of new order wins now stands at 5,122 crores for Q1 FY24 as of now. So you will see that on the back of this new order win, the stock is surely buzzing in trade today, holding a gains of over 1.5%.
Okay. Surely keeping an eye out on Kalpataru Power. But let's move on. And Nooresh, you picked out one more bank for us, and that is RBL Bank. How are the charts, and what is the indication that we are getting in terms of RBL Bank? In the last 6 months, done pretty much very little in terms of a return. What's looking for RBL Bank now?
So RBL Bank has gone through a phase of being talk of the town back in 2018 to being a stock which corrected sharply in 2020. And the worst part, in 2022, it broke March 2020 lows, went below 100 levels. So at one point of time, the stock used to be 700, went down to 100. And it has made a solid recovery from last year bottoms, went up to from 90 to 190 levels, then again corrected to 140. And now we are back at 180 levels. Now, on a longer term chart basis, this is a huge turnaround. Even back in 2021, the stock had made a top at 270. So if you put a sloping trend line, it has a huge breakout around that 180 mark. The recent swing highs were around 180 as well. So looks like a huge trend change, a huge cup and handle or an inverted head and shoulders pattern on a sloping basis. This actually keeps us a target price of 220 to 270 in the medium term. Would keep a stop loss at 172 for this.
Okay, moving on, and Ashesha, coming to you for next one. You have picked up Dalmia Bharat Sugar. Tell us what's buzzing out here.
Well, yes, some corporate restructuring has been announced, and that's the reason this counter is gaining in trade today. In fact, as we speak, it is up over 1.5%. So the board of directors have approved scheme of arrangements between Dalmia Bharat Sugar, which will be the demerged entity, and Dalmia Bharat Refactories Limited, which will be the resulting entity. This has been done by way of demerger or the demerged undertakings. And the company has also gone ahead and announced its swap ratio, where they said that one equity share of Dalmia Bharat Refactories will be allocated to shareholders holding 39 equity shares of Dalmia Bharat Sugar. So on account of this restructuring that has come in, this counter is buzzing in trade today. In fact, as we speak, it is up over 1.5%.
Okay, let's move on and talk about Power Grid. Now, Power Grid is in focus today. It actually managed to touch a 52-week high as well. And what has happened in Power Grid is this board has approved an investment proposal of around 389 crores. As of now, also, looking at the stock, it's still trading with gains of 1.5%. At one point of time, it was up more than 2% in trade. Now, obviously, the Power Grid said that its committee of directors has said and approved an investment of projects and permitted investment proposals to be established as a dedicated telecom network for NTAMC at an estimated cost of 164 crores. And other than that, the second order that was of an estimated cost of around 115 crores. So on the back of this, we are seeing that today Power Grid is in focus, up and away in trading with gains of 1.5% as of now, Shrishti.
Okay, moving on, and Nooresh, once again coming to you, and once again it's a banking name, but it's IndusInd Bank, which has set a new 52-week high level for itself. Now, how are the charts looking like to you, and what sort of target you are looking out for this one?
So over the last few months, it's been clear that IndusInd Bank is the new leader. The stock was the first one to actually make a new 52-week high in this move. Went up above the 1250, 1280 mark, went to 1340. Retested the 1250 mark, and now we are back above the 1340 mark. What is interesting is the stock had made a top around this levels back in October 21 as well. And pre-COVID also, the stock used to be around 1340 in February of 2020. So this looks like a huge trend change and a new leadership positioning the stock is taking. It should ideally go towards the 1600 mark or higher in the medium to long term. Would keep a stop loss at 1250 and be a buy at current levels as well as on dips.
Okay, let's move on and talk about JK Tyre then. Lisa, why is JK Tyre in focus today? What's the news for you?
Well, yes, they have completed their first phase of capacity expansion, and this is for their Madhya Pradesh-based manufacturing facility. So the expansion will result in 31% increase in the plant's annual output capacity from 39 lakh units to 51 lakh units. And the company also updated on their second phase of expansion, which is expected to be completed by April 2024, and that will lead to an additional investment of around 617 crore, and it will also result in further expansion of around 31%. Well, the company management said that the company's production and manufacturing capabilities is constantly evolving with the product range, and that's why we can see the stock up around 10%.
Well, yes, absolutely. Stellar gains coming in for JK Tyres. But as we have all the focus on the auto OEMs today, because tomorrow they're going to be coming up with the auto sales data for the month of June. And we have seen a lot of technical call coming in on the auto counter. So let's tell you what are we expecting onto the number front. So this time around, eyes will be on the two-wheeler, which is set to witness a recovery in the demand from the rural as well as the urban demand is expected to pick up. And all these companies are expected to show momentum in terms of sales when it comes to their exports exposure. In terms of the passenger vehicle segment, we are expecting just a single-digit decline from the likes of Maruti Suzuki, Tata Motors as well as M&M. But the key to note is that dealers are highlighting that there has been a fall in the new inquiry levels as well as the discounts are seen to be increasing. From the commercial vehicle segment, a bit of a relief coming in as all the players are expected to witness a month-on-month recovery. And with the onset of monsoon, tractor sales is expected to see a sequential gain, with Escorts expected to show a gain of 9% on their monthly sales data, as well as M&M expected to close the month with 40,000 of units being sold in the month of June. So let's see how the numbers are expected, but definitely across the board we are expecting a good momentum.
Okay, keeping an eye out on those auto names, but let's move on and talk about NTPC on the charts. Nooresh, what are the charts indicating for this one? Currently at 188, would you say it's a buy now?
So it's a buy, it's a good defensive pick. So if you look at the last 6 to 8 months, the stock was in a range of 160 to 180. Every time it dipped to 160, 65 was a good defensive bet and bounced back to 180 odd levels. Now it has given a breakout of this 6 to 8 month range, a triangle breakout done. And after making a move towards 188, the stock made a flag formation over the last 2 weeks. And we've given a breakout above the 188 mark. So expecting this to go towards 200, 220 in the short term. Stop loss now would be placed at 184.
Okay, from the pharma space, Ashesha, you have picked up Zydus Life Sciences. The stock has been a great mover in the recent past, but for today, why is this counter is in focus?
Well, yes, some US FDA action coming in over here. Zydus Group has received US FDA tentative approval for certain tablets which are used to treat breast cancer. The company also said that the product will be manufactured at company's group formulation manufacturing facility, which is located in SCZ Ahmedabad. As far as the total annual sales is concerned, this drug has annual sales of about $3.3 billion in the United States. And the group now has 373 approvals in its kitty. So on the back of this news that has come in, the stock is in focus today. It is off the highest point of the day, but nonetheless sitting with gains of 0.2% as we speak.
Okay, surely keeping an eye out on Zydus Life. But that was stock number 31 and that was the last stock for today. So thank you so much, Nooresh, Ashesha, Lisa, for joining in with us on the show, as well as Amar. But let's move on and talk about Senco Gold Limited. Now, the company is going to be opening its IPO very soon. So we are joined by the management today. We have Mr. Suvankar Sen of Senco Gold Limited, the MD and CEO at Senco Gold Limited, while we also have Mr. Sanjay Banka, the CFO at Senco Gold Limited, to talk about what should we be expecting from the company that is going to be opening its IPO very soon. What should an investor actually know about the company? Thank you so much, gentlemen, for joining in with us this afternoon. And Mr. Sen, I'm going to start with you. Obviously, let's just talk about in terms of the objective. Yes, we know it's a fresh issue that's going to be, the funds are going to be used for the working capital requirement, and there are any expansion plans on the anvil then, and you already have 136 showrooms. So any plans to expand that footprint further in terms of the distribution channel as well?
If you look at our historical past, then you will see that every year on an average we have been opening around 6-7 company-owned, company-operated stores and around 6-7 franchisees. So just like the way we have been having around 19 to 20% CAGR growth year on year, so we will continue to use these funds for working capital, for expansion and for growth of the company.
So Anka, once again coming to you, just wanted to understand about your expansion plans. How are you planning for expansions by the way of asset-light franchisee route or through your own stores? Throw some light on this.
So it's a blended model. If you look at our number of stores currently, we have approximately 140 stores, 75 company-owned, company-operated, and the remaining 65 franchisees. So it's about approximately a 50-50 ratio. So we think that based on the historical numbers, we will continue to have a similar ratio and proportion in terms of our growth as well.
Right. Sanjay, coming to you, I want to understand in terms of the gold prices, how does the company hedge itself from the fluctuation in terms of gold prices, and what is the impact on the P&L then?
Thank you for asking this. We are hedged to the extent of 90% of our inventory. So with that, we are fully hedged against any gold price movement. Whether the gold price falls or rises, it does not impact our financials and balance sheet. We are fully hedged against the future and any risk on the gold price movement.
Okay, so almost fully hedged with the volatility in the gold prices. But Suvankar, at what rate is the organized sector growing currently, and how do you plan to gain the market share? Because this particular space is quite fragmented. We have so many unorganized players. So how do you see the market dynamics?
So as per the CRISIL reports, maybe 10 years ago, the organized sector had only say a 30% share and the unorganized had a 70% share. But over a period of time, it is seen that the organized players are having a higher share of almost 40 to 50% and the unorganized approximately equal. But the thing is that it is not that the organized players are only capturing more market share. We are seeing in the industry that the unorganized players are also getting more and more organized. System processes are being adopted by them. The rules that are being brought in by the government are being adopted and followed by everyone. It is just a thought process and a mindset. We as a pioneers and one of the leaders in the organized segment, which the transformation that we have been having is more than 25-30 years old transformation in terms of system and processes. So we feel that we will be moving at a faster rate ahead of the others and capturing more market share or reaching out to more customers. So this is how we look at the situation.
Absolutely. And Sanjay, just one more point we want to understand is that the company is actually intending to continue increasing its gross margins. They're going to be focusing on certain products and categories which will yield higher margins. What are these product categories, if you could give us an understanding, and what are the sustainable levels of margins that you see for the company going forward?
So what we have said in RSPC, we are not giving any projection about the future. If you look at our past, our gross margin or EBITDA margin has been stable. So our EBITDA margin is in the range of 7% and our PAT last year was 4%. And this is among the best when it is seen at a return on net worth level. So we will continue to work hard. We will improve our stud ratio, which is currently in the range of 11%. And this diamond margin, which is stud ratio, will help us improve the profitability, and while we will take care of the costs. So overall, while our gross margin will improve, the cost will keep in control, which will flow down to EBITDA level and PAT level, enabling us to deliver superior return to our shareholders and stakeholders, which is among the best in India even today.
Okay, but with this, we'll let you go on that. Thank you so much, Suvankar and Sanjay, for joining us today on ET Now and helping with how do you plan to utilize the funds being raised in the IPO. So that was Senco Gold IPO management, where the IPO opens between 4 to 6 July with an IPO size of 405 crores. But with this, viewers, let's move on to an ET Now exclusive, where we learn from reliable sources that Byju's might dilute its stake in Akash Education in order to garner funds. My colleague Anurag Joshi joins in with more details on this one.
EdTech giant Byju is sounding out potential investors for a possible equity stake sale in its test prep subsidiary Akash Education Services. Sources told ET Now that Think and Learn, which is the holdco that operates the Byju's brand, is seeking to dilute a portion of its 70% equity stake in Akash, and that recent talks with investors have centered on an about up to 20% stake sale in Akash. Now the talks with the prospective investors are very early and are preliminary. So Byju's bought a controlling equity stake in Akash in 2021 from the company's original founders led by JC Chaudhary and Blackstone managed funds. Blackstone had stepped into Akash in 2019 as an investor and bought an about 38% equity stake in the company from the founders. So the shareholding pattern right now is that Think and Learn holds 70%. The original founders led by JC Chaudhary are owning 19%, while Blackstone managed funds own the balance 11% equity stake in the company. Akash started in 1988 as a test prep service provider that prepares its customers for entrance exams, especially engineering and for medical tests. And it has a base of over 300 test centers around the country.
Okay, thank you so much for that, Anurag. But with that, we are absolutely out of time on this edition of Market Fatafat. It's a goodbye from Shrishti, myself, as well as the team who put this show together.